into the more exciting time of earnings season when the FAANGs are going to start reporting. What do their charts look like? What is happening with some of them that were kind of treading water the last couple months? Are we getting any breakouts? Are they cheap? Are they expensive? What's happening? Let's take a look at their charts and find out. So the first one out of the gate is Facebook. And as you can see, they have a very good earnings surprise record here. Just the 4 misses over the last 5 years. And they put together 3 meets or beats in a row here going into this report. And as you can see, the shares also now responding, busted out of that narrow trading range that you can see right here, and now at all-time highs. Now they're up 12% year to date versus the S&P 500 up about 11%, so slightly beating the S&P. But Facebook continues to be the cheapest of the FAANG stocks on a forward PE basis, trading at just 27 times. That sounds cheap compared to some of the others. And so Facebook, surprisingly, is showing some strength here, even with the regulatory concerns. But this is going to be one to watch to kind of see what's happening with those earnings and if they could, see further growth here on the east side. Then switching over to Apple. This is one of the ones that has kind of lagged recently as well, but look at its earnings surprise track record. It is fantastic now, meeting or beating every quarter except that one little red arrow down here all the way back in 2016. So they're maybe about to have a perfect 5-year earnings surprise track record. And you can see this, the shares have rebounded off of that sell-off earlier this year, trying to get there to test those new highs, but can they on this earnings report? Now, the PE is a little bit more stretched on Apple than it used to be a couple of years ago, now trading at about 30 times, but that is down from its previous high a couple months ago of around 33 times. So shares are relatively a little bit cheaper here, but we'll see what happens on this earnings report. Then we're going to switch over to the other A, Amazon. This is also another one, again, that's just kind of treading the water there. It looks like it wants to break out right here, though, after that weakness, just like Apple, but hasn't quite gotten there yet. And we'll see if this earnings report can push it higher. Now, it has put together these 3 big beats in a row as it's been a big success during the pandemic. But the questions remain about how much business will be there once the economy reopens. Although the company themselves just said they added 50 million more Prime members and now have 200 million Prime members. So it sounds to me like people are willing to stick around even after the reopen. But Amazon trading with a forward PE of 68 right here. That is among the cheaper PE levels that it's had in its history, but it is still the most expensive of the FAANG stocks on a PE level. Then we're going to switch over to the other one that is reporting this week. So Netflix is the first one out of the gate of the FAANGs. And you can see they've had a little bit of difficulty during the pandemic putting together any kind of beat there. 4 misses in a row, which is very unusual, as you can see, going back to 2017, the last time they had any misses, and then just 2 in a row. So this is kind of a rare occurrence where they're not meeting the analysts' expectations here. So we'll see if they're going to turn that around. And just like Amazon and a couple of the others, it's trading in this narrow range, trying to break out, but then does not. Can they get there this time? Netflix is trading at 55 times, and that too is cheaper than where it used to be, trading above 100 times. So it too has come down a bit as the E side of the equation has gone up, and then we've just had the shares treading water. But what will happen here? Will there be another breakout? We will see. And then we're going to wrap it up with Alphabet, the G, Google. And they've put together 3 big beats in a row as well. But this is one of the few of the FAANGs, which I guess you could put Facebook in there now too, since they're busting out, which has not been just treading water. It has been on this kind of slow climb during the entire pandemic. Now, Alphabet is seen as a post-pandemic play because it gets a lot of advertising from travel. And as that is now busting out and recovering, everybody believes that the advertising side of Alphabet will also see a big recovery. So you can see these shares busting out to new all-time highs. They're up 30% here year to date, easily beating the NASDAQ up only 9%. Can it keep up this blistering pace? I don't know. It's trading at 33 times here, so not super expensive comparatively to some of its peers, but not as cheap as it used to be. It used to be among the cheapest of the FAANGs, around mid-20s PE. So, but with this rally, that PE side is really on the increase here. And so we'll see if Alphabet can meet these really high expectations. I know a lot of us own the FAANG stocks. I own Facebook, Amazon, and Alphabet myself, so I'm going to be tuning in to see what happens with all of these as we go through earnings season. But they've had interesting charts with several of them still just sitting there treading water, waiting to see if they're going to break out. And if they do, you know what that means for the indexes. Their indexes are already at record highs, but any breakouts from some of these big mega caps can really push those index even higher into the strong rally that we're seeing here in the spring of 2021. So this is going to be an interesting one to watch, and I'm going to be there bringing you all the charts for all these companies. So be sure to subscribe to get all of our charts on zacks.com/YouTube, and I'll see you again next time with some more earnings charts.